Namaste and welcome to Earnings Corner, where we will decode quarterly results of leading IT companies. Today we will be analyzing the Q2 FY25 results of TCS, which was announced on 10th October 2024. Before we do a deep dive, let's take a moment to pay tribute to the legend Padma Vibhushan Ratan Tata, Chairman Emeritus, Tata Sons. So let's look at the recurring theme from the earnings report. Management is cautious and expects the trends of the last few quarters continue to play out in this quarter as well. They are seeing some signs of improvement in North America with the demand environment being strong. Key headlines from the announcement. Revenue at $7.67 billion. Growth of 5.5% in CC led by energy, resources and utilities, manufacturing. All the growth markets march above company average comprising India, Middle East and Africa, Asia Pacific, Latin America. Operating margin at 24.1%. H1 FY25 net headcount addition of more than 11,000 employees. So on hearing the news, how did the stock market react? TCS share was down 1.85% post the call. Analysts attribute this to lower revenues and margin. However, the larger consensus is that in the coming days the stock could see a re-rating on the positive side with the US Fed easing interest rates. Growth when seen from a quarter-on-quarter basis. A comparison with Accenture will help understand how it has been faring. Growth, albeit flat, has not seen a significant dip in recent quarters. This quarter could have been on a higher side, however due to a couple of client-specific challenges it has been flattish. From a geo perspective, North America has been seeing a sequential dip. Management is seeing signs of improvement in North America. They are attributing it to the BFS sector thanks to the rate cut by Fed. A year back, revenues from Americas were over 50%. Now it stands at 47.6%. Europe has been constant. India has helped the ship stay afloat, growing from 5% to 9%. From a vertical standpoint, we can look at it from two perspectives, short-term and long-term. Short-term, quarter-on-quarter, life sciences, communications and media and consumer business were laggards. Regional markets grew at 1.5%. Long-term, over 7 quarters, we find BFSI, consumer, communications and tech were biggest losers. Regional markets have grown over 40%. Management is keeping a keen eye on the retail spends in the coming holiday season. Gen AI is an area that all are looking at. While TCS doesn't give out revenue numbers, we saw a twofold increase in number of engagements. Clients seem to have moved beyond experimentation to integrating it in core projects. From an Accenture perspective, they are clocking close to $900 MN in revenues. It's just a matter of time TCS plays catch-up on the Gen AI front. Growth has been constant and not really declined. While management says they are seeing offshoots in North America, for this quarter, regional markets and the BSNL deal has saved the day for them. Q3 FY25 looks to be muted, to be again saved by BSNL. However, they have to win and start mega deals. Hoping quite a bit on uptick in revenues from retail in US. Positive surprises will be in Q4 FY25. I hope you liked watching this edition of Earnings Call. Please like and subscribe and share any views in comments. Thank you.